So the chart that everyone's talking about in relation to the OPEC meeting is the WTI Brent spread. I have that in my terminal. All of a sudden that spread's $5 versus $11. Why?
Well, I think there's probably some movement there of managed money, of investor flows, because really the fundamentals we don't think ever supported $11 a barrel. Something on a range centered around $5, which can be volatile. Obviously,
so
that makes a lot more sense.
So this is in relation to more oil coming online from OPEC and Russia?
I don't think so.
Bob?
Yeah, I mean, I think there might have been a little bit of an impact from the fact that markets may not have been expecting this big an agreement, may not have been expecting Saudi Arabia to move as aggressively. So, again, when you get a market that's as stretched as this one, and you get one little bit of information to begin to turn it the opposite way, you can really see that I think a lot of the price movement in the last couple of weeks has probably been spread trading rather than outright trading. And that's actually where the big move has been in the spread trades, and that's where you see a lot of short-term investors involved.
So, Mike, as you sort through what OPEC agreed to, OPEC Plus agreed to, who are the winners and who are the losers?
Well, I guess in terms of, if you're thinking in terms of production and market share, though, the big winner would be Saudi Arabia and Kuwait and the UAE, so the Arab Gulf monarchies, and the loser would be Iran. I mean, the range of production scenarios that Javier talked about is absolutely right, and really we think we're going to be towards the higher end of that, because the key difference between what happened on Friday and what happened on Saturday is that Al-Fali clarified that really it's a total OPEC cap, but the country by country targets are going to look like they're going to be ignored. So that means a bit more crude.
Do shale producers lose because the price comes down? There's a limit on the price?
I think shale producers are going to be just fine. I mean, they're particularly in the Permian, I mean, they're so far above their production costs, which are still $35, $40 a barrel. Honestly, I don't think a few bucks makes a whole lot of difference to them.